Well, that's the SGX Nifty looking rather soft at this point in time. Asian markets are actually mixed. There's just an off chance that we presaged the fall in the Wall Street indices and the Asian indices yesterday itself. So maybe we could chart a different course, but we'll have to wait and see. At the moment, SGX Nifty is just falling in line with the other Asian markets. A little tepid, we will have to say. But we will have more trading strategies for you. We are being joined by Chandan Taparia of Motilal Oswal Securities. Chandan, good morning. What are you trading from the FNO desk?
Very good morning. Thanks. We have seen some selling pressure in the market, but it managed to respect the support of 11,550 zone. So some upside is restricting, but supports are intact in the market. So again, stock space action is likely to be there. And now clearly the stock and sector rotation is visible in the market. We have seen buying interest in selective IT and gas companies and expecting positive momentum in the same. So first trade is buy on IGL. The stock has seen the positive consolidation breakout with significant jump in the trading volume. The trading volume were more than 5 to 7 times than the regular trading volume, and it has seen the open interest addition by around 5 to 7%. So built up of long with significant jump in the volume with price consolidation breakout indicate some up move in the stock. So recommending to go long for an upside target was 330 with a stop loss of 308 in the counter. Second trade is buy on UPL. The overall trend of the counter is positive, and after the consolidation of last 4-5 trading session, it again managed to hold its gain and forming some swing higher highs in the price pattern per se. The stock is holding well above the previous volume weightage average, and longs are here adding. Some short covering could be seen because at the time of decline some shorts were added. So recommending to go long with stop loss of 930, and this stock has potential to go towards 990 level. One more option strategy, that is Infosys bull call spread. Now we are heading towards result season of IT heavyweights like Infy and TCS, and as per the price pattern some positive uptick could be seen in these stocks. We have seen consolidation breakout in the Infosys. The stock has managed to hold its gain. Maximum call low is shifting to 790, 800 zone. Put writing is visible at the immediate strike. The stock is holding well. However, the IVR increasing, so that's why we are recommending to be with bull call spread. So strategy is all about buy one lot of 770 call, sell one lot of 790 call. In the entire strategy, one has to pay the premium of 9 points, keep the spread stop loss of 4 points, keep the spread target of 18 points, so almost 1:8 risk reward ratio, and we are expecting Infosys to move towards 785 to 792.
All right, Chandan, thanks a lot for all those trading ideas. Sandeep Shinoy of Pioneer Investcorp is with us now. Sandeep, good morning. I wanted your thoughts first on Indiabulls Housing, how to approach that stock with this impending merger. We don't know if RBI will approve it, but regardless of that, how to approach the stock?
Well, Anuj, I always belong to that school of thought that whenever there is a corporate action happening, one should stay away because the dynamics affecting generally this kind of companies are going to be much beyond what fundamentals convey. So I guess, yes, while it's good to talk about it, but for a lay investor, I don't think it's going to give much of an opportunity both in medium term as well as long term.
Okay. Sandeep, hi, good morning. I wanted your thoughts on how to approach NIIT. It was the stock of the day yesterday. It gets that big 2,000 crore, windfall after the deal with Bearing. But as an investor, do you like either NIIT or NIT Tech?
Well, I think one of the companies, actually the change of ownership, we have seen it happening in a couple of other companies where a private equity player comes. We saw it a decade back in Emphasis. We saw it later in Hexaware. You know, some stability comes and, you start getting a scale up. Those kind of things will always augur well for an investor who tries to stick on for a longer term. Because the second rung and the third rung IT companies are going to be the ones which could be giving you marked outperformance over the period of next 3 to 5 years. But that's what investors should look at. But coming to the other point of a jackpot earning coming to a company and that leading to some kind of a re-rating, I don't think that's going to play well because that's not an investment strategy what a medium-term or a middle-of-the-road investor should adhere to.
Okay. Well, we want to ask you about industrials as well. But before that, we have an interesting report coming from Jefferies on a bunch of industrials, L&T, Voltas, NTPC. Anisha is here to just detail the highlights of that report. And Sandeep, we would like your view on several of those sectors. Anisha?
Oh, well, yes, it's quite an extensive report, and they talk about how the recent rally in industrials might be a trading move and not really a sustainable move. Now, in their chat with investors, there were concerns raised about the valuations, given the recent run-up in the stock of around 20 to 25% in the last 2 months itself, and they believe that the earnings might not see a material upgrade in consonance with the move that we have seen in the stock prices. Other than that, they say that they're not expecting a strong 15% CAGR growth in the capex that we had seen in years of FY8 to FY13, but they are expecting that capex might grow at an annual rate of 10% over the next 4 years. As a result, they have buys on the likes of L&T, Voltas, KEI, NTPC, etc. Quickly, to just tell you about these individual stocks, for L&T, they talk about how the target price is 19.25 and how they're positive on the business. But nonetheless, for the near term, the Mindtree deal might cap the upside. For Voltas, there's already been a run-up of around 20% this month itself, but they believe that the low base of FY19 gives the earnings a surprise element and a potential to really beat the expectations. For KEI, they say the stock is still being discovered. There's a lot of chatter and interest in this stock, but the good medium-term story in terms of the valuation re-rating should continue for KEI. For NTPC, they are a bit surprised by the recent rally that we have seen, and they talk about how most of the investors have actually missed out on this rally. For BHEL, they have an underperformed rating. They believe that the stock will correct further, given the disappointment that we have seen from the stock. And lastly, for Concord, they say that logistics is not really on the radar of the investors, but nonetheless, Concord stands as a good bet, and they have a buy call on the stock. Back to you.
Thanks a lot for that, Anisha. Sandeep, my question is just off this report, not exactly on this report. Power companies. I mean, the last 5 years, we only tried to de-knot the entanglements of the previous 5 years. No new capacity has come in. Existing capacity has not been used entirely. Do you think it's a good long-term bet, any of the power companies?
Well, Lata, if you look the prima donna of the utilities, it has doubled its asset block and then doubled it again over the period of last 10 years. But has it made a difference to its market valuations? No. So it hasn't gone, it hasn't gone anywhere. So yes, I think the landscape is good. On paper, we have a shortage of power, and theoretically you can sell power maybe in excess of, say, 4 rupees 75 paisa on a normative basis. But is it going to translate into any profits to anybody on a scale which will propel a re-rating? I don't think so. We have had, I think, waiting for Wolf or waiting for Godot too many times and too long for this sector. Is anything going to happen which can trigger off a re-rating? I don't think so. So yes, at best you could have some trading moves out there, but a sustainable thing, I don't say the business model is broken, but on the landscape, nothing is emerging which will trigger off a re-rating. So it's best to trade in it. Otherwise, you can stay away. You're not going to lose much.
Okay, is the worst over for a stock like Maruti? I mean, it's come back from those lows of 6,500. It's back to almost 7,200 now, Sandeep. You think the worst is over?
Sonia, I think ever since you have been on this set, you must be saying that this is the first year where you are actually seeing a degrowth. I think scooters, maybe after 10 years, motorcycle again, a pause button being pressed. And you are going into four-wheelers, which are probably the third end of a discretionary spend. I think this is a worrisome sign. The correction which has come into the stock may have preempted the slide in the sales, because smart money also always has its own logic. But is it going to be what we say uptrend in a curve of offtake going to come? I don't think it's going to happen in a hurry. So we have some problem zones both on the rural side as well as technological side, and I think that's going to cast a long spell on most of the auto companies, four-wheelers as well as two-wheelers.
Okay. Sandeep, then how at all are you playing this, upturn that we have seen in the markets? I mean, we are one of the best performing markets on a 12-week, 8 weeks period, or even if you looked at it from last October, there's been a substantial improvement in the markets. Are you participating? Are you staying off ahead of the big event like elections?
Well, I think time has come for people, or you can say conservative investors, to really take some money off the table. We have had a good rally, but that hasn't anything to do with fundamentals in India, especially on the corporate earning front. It has largely to do with the cash flow, money flow on a global basis, and that's what India got benefit about. Our earnings, if you see now, I think most of the previews are out, we aren't going to show any double-digit earning this year also, and that probably could be maybe the 6th year in a row. So somewhere or the other, fundamentals will rule the roost and start biting on the valuation front. So you could have some kind of a decent or a healthy correction, which is good for the market on the longer-term basis. But somebody trying to trade in at a fag end of a uptrend, I think you are playing with probability.
Okay. What about Sun Pharma? How to approach that stock now?
Well, Anuj, pharma, I think we have had, like this is one sector we always were of the opinion that it's going to be a resilient or a bulletproof sector. But for some strange reason, maybe, it became a structural derating of the entire sector, and some of the larger players really got the bad end of it because of some other specific issues which were related to the companies and not to the sector. But many of the larger players, especially the top 3 players, they have managed to get their act together. But is it going to trigger off a re-rating? No, I think it's going to be a stayed sector even for next 3 to 4 quarters.
Okay, well, we'll come back to you, Sandeep, for more on the markets and on individual stocks. But through the day